Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for all you CommunityFT members, in which we are going to take a look at some major potential movements to occur in some major asset classes over the next 24 hours. But before we do that, at this point everyone, let us all embrace a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible so that hereafter any decisions you make in your trading are of a fully informed nature. Okay. So, on the cards for us all today, guys, let's take a look at some economies, okay? The value of those economies as is reflected by the value of their currency. Let's also take a look then at crude oil. So, we're going to be looking at the Kiwi or the New Zealand dollar. And let's also take a look then at WGI West Texas Intermediate. Okay, in front of us, guys, are looking at the daily chart of New Zealand dollar versus US dollar. What's quite notable or quite obvious upon first inspection is the strengthening of the US dollar versus the weakening of the Kiwi dollar over the last given period of time. And of course, a little bit of secondary trending within that overall movement. What's interesting to me anyway, okay, is rather than simply using an indicator to catch the overall trend, okay, with a little bit of careful position sizing and stop loss placement, what one can actually do is use a stochastic oscillator to catch secondary movements within an overall net movement, okay. That's what's quite key, whereby the moving average might be indicative, the 55-day EMA might be indicative of where the overall net movement is going. So we can almost be hedged in two positions then, or we can almost hedge our positions all the way down, which is quite an interesting way to trade. For those of you who are intraday traders, okay, some volatility may be experienced over the coming day due to the CPI figures being released for the New Zealand dollar. Okay, now we're looking at crude oil. Crude oil is quite interesting here over the last given period of time. And what I'm going to do now is I'm going to draw in the Fibonacci's, okay? Just so we're all absolutely clear and on the same track, okay? So, of course, they are completely invisible at this moment in time. Let me just change those colors over, guys, okay? So we can all see them. Okay. So we're looking at the Fibonacci levels, okay? We originally have the 0 level, which would be the recent highest high, okay? Actually, they're drawn incorrectly, guys. Sorry, I couldn't see them the first time. We originally have the 0 level, okay? Which is where the recent trend begun. The highest high then, the 100 level, okay? And then the projected points in the current levels. So the 38.2 mark seems to have been tested already for support, okay? But that will be revealed by today's trading also. What may happen is a lot of people will be looking out for the market to obey 23.6 and that retracement of the Fibonacci level, okay, as its support. So there could be a lot of orders, guys, placed for long positions around here, which could be indicative of what the order flow is doing. But in terms of this breakout, what's really key to understand here is the 100-day exponential moving average, although it's been relatively accurate before, was very inaccurate in this case, okay? Now, the market may be in the midst of finding its true trajectory, but so far it hasn't been accurate. And when we look further at the commodity channel index, okay, it had quite an overall positive slope, which has now gone negative quite quickly. So what's required really is to have a risk management system in place such that when things do go against us, we are unburned. I hope that's been of help, everyone. If you have any further questions, please let me know. Don't hesitate to get in touch. We welcome all inquiries. Have a fantastic day. And as we say here, keep learning.